texting me that Genius Singapore has a short position against Tesla. What is happening? Well, I'm a Tesla bull. I'm basically all in on Tesla. He is basically all in on Tesla, but now he's not. I don't trust Adams because we just make up everything, but Ken, I trust. Crap, my wife. I left the toilet seat up. I'll be right back. My friend told me to go to this part of the interview where Ken is seemingly about to pick his nose, which I did. And I love chicken. I don't like roasted chicken. I love beef, but not YouTube kind of dramatic beef. I don't like any of that. And I love geniuses, especially Chicken Genius Singapore. So let's find out what is going on. And no matter what Ken is gonna do with his Tesla stock, whether it's an outright short, I will still love him. I love his jokes. Most importantly, especially the one where he puts his microphone on a spatula, which I don't have. So let's find out whether Ken is really about to pick his nose.
It's like, don't buy the dip.
Not even Tesla, not even Tesla?
No, dude. Full disclosure, I still have my Tesla stock in my do not touch portfolio, but I do have a synthetic short on it. It's not due to I hate Tesla or anything like that. I'm not Tesla Q, neither I'm a Tesla bull. I'm neutral. I see Tesla for what it is. Q2 is gonna suck. I do not know how to explain it, but if you are calculating the production of Tesla vehicles per week, you can look such data.
China is gonna f it up for Tesla for sure. The lockdown.
Yeah, I mean that. But if you look at the US production per week, that's kind of questionable itself. I think Elon Musk knows something that we all do not know. But I know if you just calculate that in and you calculate inflation, so that's the thing with inflation. Previously, there was this wealth gap that's the poor will not get affected, the rich will not get affected, but inflation affects 100% of people out there. 100%.
True.
Elon Musk gonna get affected, everybody's gonna get affected. And because of that, Tesla earnings is gonna get pretty much affected. Together with lower deliveries. I think there was a leaked email about 300,000 cars. Dude, if you go and do calculation of how much vehicles coming out of the factory per week, it's not going to reach there. Again, I'm saying this as a Tesla long-term holder. I'm not Tesla Q. I'm just being really objective about it.
This was right before the deliveries of Tesla Q2 announcement.
Lower deliveries plus higher, although they did increase the price of the car, but a lot of their profits will be taken away. So
So you're seeing a margin erosion, revenue erosion, supply erosion, basically a horrible Q2 based on macro conditions.
Yes. Yeah.
And would you buy Tesla
issues?
Post Q2? Would you wait for the Q2 hammer to drop and then buy?
I don't know. Bear market's gone for a really long time. But I do have my first entry price, and I know a lot of people is going to shoot me down for this. But
is it going to be 420?
If actually my first entry price, accordingly, if I see the market meltdown and stuff, I see the S&P at about 3,200. There, I mean, at least I need to have a baseline entry for myself. If it goes any lower than that, screw it. I can't time the market. But with S&P 500 at 3,002. I do see Tesla stock at about 420. I know that number keeps appearing all the time, but that is the point of time where I will kind of switch.
Bro, there's no way you chose 420 or is this 420 is such a crazy number, bro?
That is a good support. I mean, if you do technical analysis and you calculate their reduced margin and free cash flow, it's about 420. And if you look at that's fundamentals. And if you look at the technical charts, 420 was a squeeze. It stayed at that line for a little while before it shot up. So 420 is quite it's a major support area where
so you'll buy more at 420 and at 3,200 S&P. That's kind of your
about there. So I would convert my synthetic short on Tesla to a synthetic long. Depends on the option premiums. That's where I'll go long again.
So in summary, the good news is Chicken Genius Singapore did not I repeat, did not pick his nose. He touched it, but I know media is going to exaggerate it and say, Chicken Genius Singapore picks his nose and shorts Tesla. No, that's not what happened. What Ken is doing is touching his nose and he has a short position to protect downside against Tesla, where effectively he has almost no position in Tesla. If a stock goes up, he doesn't make money. If a stock goes down, he does not make money. He's just basically buying insurance because he's very worried about short term and he thinks that it's more likely to go down than to go up. Now, would I do that? I think as a serial millionaire entrepreneur, my net worth is over $10 million. I am not doing that. I just hold Tesla stocks because I think there's a good chance, knowing Elon Musk and Tesla and knowing how he can just come out with things out of nowhere very quickly and stun everyone, crush records, and then the stock goes up very quickly. With that in mind, I would not want to protect against potential downside because it's a little hard to tell sometimes, then is Tesla stock really going to go up? Remember, there was a 5-year period. And by the way, we're not done with Chicken Genius Singapore. We're going to look into a few more clips for some very important information coming up still. But there was a 5-year period of Tesla where it was basically flat. And then if you sold your shares around 2019, thinking about, oh, Tesla hasn't done anything basically for 5 years, I'll just for a little bit, I'll just do a synthetic short just in case it goes down, because it has gone down before, but it hasn't really gone up past those support lines. And I think that will work out. And guess what? It would not have worked out at all. The stock skyrocketed. So it's really difficult to predict the timing of Tesla stock. Again, I love Ken. I love Chicken Genius Singapore. I think he's doing great work and his jokes are top notch. I love those. So I think Ken has something very valid to say here. Is there a risk with Tesla stock? Of course, there is a risk. Just like with any stock. Elon Musk could pass away, as an example. I hope it never happens. At some point, we all die. That's inevitable, unfortunately. There's still a lot more that we have to cover.
But I do know this. I mean, for audience that's watching, there'll be a lot of pain in Tesla coming up. I'm just warning you. I'm not Tesla Q. I love Elon.
No, you're a known Tesla bull. I mean, if anything, they know you as a Tesla bull. Everybody knows that.
I'm just being neutral. I hope I don't get shit for this, but
you will not.
Q2 could be a painful quarter. You do your own calculations. Just take. I could be wrong, but just be mentally prepared. Don't be over leveraged. I don't want you to get margin call. It sucks, man. Like if I could prep you just in case you get margin call.
I never had margin ever. Because it goes against my philosophy, and I say this to my audience all the time.
I agree with that.
I never gamble money that I cannot afford to lose in the casino, and I never invest money in the stock market that I cannot afford to lose. If I don't have the money, I'm not playing with money I don't have. Never, ever have I done that, ever.
So this one thing is good that you see, like the investment world is simple. The longer you are in it, the more money you make.
Exactly.
Time in the market wins everything.
Yeah, I never understood the concept of taking loans to invest. It's very it will work sometimes. With Dave Lee, this worked. Dave went to margin to go 150% Tesla or some shit like this.
Wow.
But for every Dave Lee went early, like 2012 or something like this. But I mean, for every Dave Lee story about Tesla, there's 99,000 times where it didn't work and people destroyed their marriage, their family, their life. It's like the story of the basketball player who makes it to the NBA. For everyone that made it, there's a lot that didn't. Most don't, bro. It's a very dangerous thing to do.
I really agree with Tom here. Do not go into margin, especially if you have Tesla stock. If you have any margin, get rid of it. Don't borrow against Tesla stock. I would really not do that. unless it's like 1% of your Tesla stock and you just need it for a few days. That's what I would personally do at most. And it was interesting what Tom said about Dave Lee. I did not know that Dave Lee borrowed against Tesla stock to basically get more Tesla stock. I did not know about that. That's an interesting fact. I think it's one thing to borrow if you have real estate and you get a mortgage. It's a whole different thing, which I have real estate, but the only stock that I have is Tesla. But when it comes to stocks, I will not buy stocks with borrowed money if you are borrowing against other stocks. But there's a lot more that we have to discuss here.
Why I think Tesla Q2 earnings will hurt. Firstly, I'm a Tesla bull. I have a few million worth of Tesla stock and a synthetic short to protect the downside. It's different from outright shorting. I'm just trying to be objective and realistic here. If I'm wrong, good. Stock goes up. First, the most important factor you need to consider.
Hey, look, I can really appreciate Ken having the short position to protect from the downside. I don't agree with it, but I respect it.
Tesla is laying off workers. As management, they must have saw some data that worried them. Look, if you are in management, will you start layoffs for no good reason? Second,
well, we know that Tesla is going to be hiring overall. By the end of the year, the headcount will probably increase. It's just salaried workers that are being laid off, and Tesla hired a lot before. I don't see any real issue here, of course. It's concerning. But do I see a long-term issue? No. Short-term, anything could happen. I mean, short-term, even Gordon Johnson could become a Tesla bull. Anything is possible. And I want to emphasize here, I like Chicken Genius Singapore. So this is not an attack on him. I like him and I respect what he is saying. And he has good points here. It just, I do not agree with those points necessarily.
deliveries going to drop due to supply chain issues and China factory shutdowns. The most reliable estimates, courtesy of Troy, is at 250,000 deliveries for Q2, which is
very
a drop
close
from Q1. The less Tesla delivers, profit drops, earnings drop, forward multiple drops.
True.
Third,
but then you can say all those exact same things, but the opposite about Q3 and Q4, and then next year Q1, and then next year's Q2, and then next year's Q3, and then next year's Q4, and then the next year, each year is going to get bigger, more deliveries, more revenue, more profits, higher EPS, overall is going to be better. Now, in the meantime, there will be quarters that will suck, that will be terrible. Something real how Black Swan, something inevitably is going to happen. And when those happen, I'll just try to buy more shares. I will not sell any. And if I do, I will let you all know.
inflation affects 100% of everyone. Cost goes
True.
up, margin drops, earnings drop, forward multiple drops. You get the drill. It's hard to do such videos. There will always be backfire. You go against the crowd. It's never fun. But I just want everyone to be mentally prepared for the better or for the worse. As always,
Wait, let me do it. Invest safe.
I agree with the philosophy, invest safe. In my mind, here's what is safer. This is just my opinion. If you lose your money following my advice, it's your fault. If you make a whole bunch, it's your fault too. This philosophy worked out for me so far, at least that is. So I believe if you neutralize your position right now, and I think the reason why Ken does not want to just sell the stock outright is because of taxes. Because he has made a lot of money, I think, from his Tesla stock from before. He bought a long time ago, so if he sells any right now, he's going to have quite a steep tax bill, and no one likes paying taxes. Even geniuses, they hate paying taxes. So, in my opinion, Tesla long term, it will go up. My opinion. So short term, whatever he does, eventually it will come back up, and it will come back up roaring, crushing everything. Now, it could be possible that for the next few years, Tesla stock could do absolutely nothing or even go down. That's not my opinion, but is it possible? Of course it is possible, just like Gordon Johnson could become a Tesla bull. It's possible. Not likely, but it is possible. So if my position temporarily drops another 50% from here or even 90% from here, I'm okay with that because I know it will come back up eventually. And I really don't know how much will Tesla drop if it keeps dropping. But I do know, in my opinion, it will go up, and I know how much it will go up. And so when I look at the numbers and I think about this, can I afford to miss out on the bull run of Tesla? No, I cannot. Can I afford temporarily to be in an absolute red, disgusting position temporarily because the stock market makes 0 cents for Tesla stock? I think I can. If a stock drops down 90%, 95%, I will be totally fine. In a way, I am diversified. I have private businesses that are doing fine. I have real estate, and then I have Tesla stock. So in a way, I am diversified, even though I only own Tesla stock. Now, there's another video what I want to get into, sadly.
Genius Singapore released a video that offers some incredibly stupid and very dangerous advice.
So I just woke up and I just got news that another big YouTuber shit on my last video.
I think most people understand Genius Singapore just from the name. Hey, look, there's some funny things in there, so take it to the grain of salt. If you don't agree with it, just laugh it off. It's no big deal. I like the jokes. I come for the jokes.
I'm starting to regret coming back to YouTube. Look at this.
Let's make Ken not leave YouTube again. It will be a sad place without Ken. Let's make Ken stay. Okay, so what Ken is saying here basically is that stock market follows what the Fed does. If the Fed puts more money into the market, like you see right here, S&P 500 goes back up, and it's a pretty close line right here. But although you look right here, and this looks a little bit differently, but I get what Ken is saying. Is this something that I would personally do, and I would sell my stock based on what the Fed does? Hey, look, if it was so easy and simple, we would have many more billionaires, hedge fund managers that beat S&P 500. No one really beats it regularly over a long period of time. They can do it for maybe a few years, maybe 5 years, maybe even 10 years, but show me someone who did it for 4 decades. I would rather pay no fees and put my money into S&P 500 unless I find something better, like Tesla, which is why I sold all of my S&P 500 and put it all into Tesla because I think it's a safe investment, and I made another video about why it's safe. You can go watch that one if you would like to learn more. But right here, Ken has a point. Now, he makes his points in a way that when you take what he says literally word for word, where he says, if Fed takes $1 away from the market, basically the stock market goes down $1. If the Fed puts $1 into the market, the stock market goes up by $1. Now, these are, if you take that out of context, and you take what's literally, of course, this makes not much sense if you are a sophisticated investor, but when you take it as a general thought process, it makes sense. Is it something I would bet my money on? I would rather just hold S&P 500 through disastrous times, because maybe I will make another video. Holding over a long period of time, unless you're about to retire, will beat active traders. All right. So show me traders that have been in a business for 4 decades that outperformed S&P 500 consistently over and over and over and over and over again. If it was that easy, there would be a lot of them and they would be very rich. Crazy rich. We have less than 3,000 billionaires in the world, and most of them did not get rich from investing into the stock market because they could time the market and they would trade based on what the Fed does and all that and all this. Now, there are investors, like for example, Ray Dalio, his hedge fund, his returns are okay, but the charts, when you look at those return charts, are very interesting, as in you get protected against the volatility. So you still get basically the same returns as you would get from S&P 500, but your returns are more steady. Now, that you can do, and I think that's basically what Ken is trying to do. For me, I just don't want to worry about looking at my stock portfolio every single day. When I had my S&P 500, I just put money in there, and then I waited it out. And if the stock market went down, I would not sell it. But it was up, and I was like, hey, I want to go into Tesla stock. So I did.
I'm just really starting to regret this YouTube journey again. I hate politics, but again, I really don't know, man.
Hey, I really hope Ken stays on YouTube. I love his jokes. Very funny. I like his spatula. I like his anime figures on which he puts his microphone on. I love that. It's funny. Now, like I mentioned earlier, I would just rather buy S&P 500 if you are worried about market timing, protecting against downside. There are many strategies that you can do that, and then in that case, maybe you shouldn't hold S&P 500 because it could drop 50% or more if it gets really, really bad. But when you look at any 20-year period, it comes back up. So unless you are close to retirement age, or if you will need money relatively soon, then of course you should seriously take a look into what Chicken Genius Singapore is saying here. But in my mind, I'm not going to do that. I will keep my Tesla stock. I will keep buying more, no matter how far it dips, because in the long term, I know the stock will come back up. My name is Matt Poses. I'm a millionaire, serial entrepreneur, and investor, and I will see you in the next video. Thank you for watching. If it's your first time to the channel, watch how Tesla bought Optimus Prime is possible now, and why Tesla is a safe investment. Go watch those two videos, and I'll see you there. Thank you so much.